Let me tell you something you probably already know. Bitcoin is up.
The value of the cryptocurrency has hit an all-time high.
But it's not just Bitcoin that's up. Ethereum, Solana, Dogecoin, they're all up. This recent price surge is not linked to the discovery of a novel new use case for crypto that's going to lead to mass adoption, right? That's not actually what's going on. AI also, in my view, is not about to be a game changer for crypto that lots of people are claiming online. And so it doesn't seem like we're on the cusp of a global revolution in the financial system. The real reason that I think crypto is surging right now is both more ordinary and more weird at the same time. And that's what I'm going to try and explain with the rest of today's video. And by the way, if you're new here, my name is Mags. I make videos trying to make sense of the big stories happening in tech. So to fully appreciate what's happening in crypto right now, we have to go back and see what people were saying about it before this recent surge.
Investors getting jolted by volatility rippling through the crypto world.
When Bitcoin slumped from $46,000 to $16,000 in 2022, lots of people were saying that its bull run at the time was actually a ZIRP, or a zero interest rate phenomenon. And the argument went something like this. During the pandemic, central banks cut interest rates in order to stimulate the economy by lowering the cost of borrowing. Now, the interest rates themselves were already pretty low, but this extra push meant that people had no incentive to keep their money in their bank accounts and were incentivized to spend it and invest it instead. So as investors pumped their money into different asset classes, things like Bitcoin, Dogecoin, NFTs, their value became inflated. And so when the interest rates then went up again sharply at the end of 2022, the price of many of these asset classes came crashing down. Now, there's only one problem with this theory. Interest rates right now are the highest that they've ever been, and yet Bitcoin is still breaking records. Now, granted, there is some expectation within the wider community that interest rates are about to come down again, but nobody's seriously expecting them to go back down to zero, right? So I think there's something else driving the recent crypto surge. And there are two things that people are typically pointing to, neither of which I think tell the whole story. So number one, there's an upcoming halving event whereby the amount of new Bitcoin being put into circulation will be halved in a few months, which is then supposed to push the price upwards due to the constraint in supply. So some are speculating that once this happens, the price of Bitcoin will go up, and they're all trying to get in before that happens. Now, the obvious flaw in that theory is that this halving event has been priced into the current value of Bitcoin already. So in other words, Bitcoin's price is already adjusted and accounted for all the known factors, one of which is this halving event, which has also happened in the past. And it also doesn't explain why other cryptocurrencies like Solana, Ether, and even meme coins like Dogecoin are also surging. The second explanation is that this surge is driven by institutional investors investing in crypto via ETFs. So a few months ago, US regulators approved the first ever Bitcoin exchange traded funds, or ETFs. And what that means is that you can now invest into Bitcoin in the same way that you would invest in stocks. So you no longer need to go through a crypto exchange like FTX or Binance to invest in crypto. And you also don't have to do it manually through a crypto wallet, which you have to look after, right? Instead, you can do it through a brokerage, which is basically way more legit, and you also get special tax treatment on that if you're in the US. Now, these ETFs, which have been offered by big financial institutions like BlackRock and Fidelity, have attracted nearly $10 billion of investment so far, right? And most of that money comes from institutional investors, which makes these ETFs basically the fastest growing ETFs in history, which is pretty insane. So it seems obvious, right, that given these universal laws of supply and demand, the price of Bitcoin is going to go up when there's a lot more demand for it. Except these price surges are happening outside of US market trading hours when ETFs normally traded. And they happen on crypto exchanges as well, which means that they're actually being driven by retail investors, people like you and me, except not like me because I don't actually have any money in crypto. So what's really driving the crypto craze right now? Well, to borrow a phrase from this Wired article, it's mostly just vibes. And what I mean by that is that people are basically expecting the price to go up, and the price then goes up in a self-reinforcing cycle, right? So for example, I mentioned earlier that the halving event shouldn't in theory push up the price because that halving is already priced into the value of Bitcoin, right? Well, that's true for most ordinary assets, but if you actually look at the performance of Bitcoin historically, after each previous halving event, you'll notice that there was actually a spike. And so though it did come down again afterwards, what it shows you is that when it comes to Bitcoin, if enough people believe something to be true, it basically becomes true. Now, you could say that's not different from other things in the economy, but that's a very philosophical point. And I also think there's a similar story with US regulators approving Bitcoin ETFs. Yes, there's way more interest and way more money being invested into a constrained supply of Bitcoin, and the money is in it now for the long haul, right? Those are kind of very compelling reasons why the price of Bitcoin would go up. But actually, the real impact of the story is that this now allows crypto to tell a better story about itself, which is that, hey, if these big institutions are getting in, that this is legit, the value of Bitcoin is never going to go down to zero, and so I should basically get into Bitcoin before it goes up to $1 million. Some might call this the greater fool theory because your entire investment thesis is based on this idea that might be a bigger idiot down the road who will happily pay more money for Bitcoin than what you paid for it. And I think that maybe that was true like 10 years ago, but today I think this no longer applies, because the fact that people think Bitcoin and crypto is valuable is basically sufficient for it to have that value. So you no longer need crypto and Bitcoin to have some killer use case in order for it to be valuable, right? The kind of use case that early crypto adopters and the founder of Bitcoin, Satoshi Nakamoto, had in mind for it. Now, if we zoom out a bit, we might be able to realize that this isn't actually that different from other essentially useless stores of value that we have had as a society throughout history. Things like gold, tulips, the Russian ruble. So maybe the biggest difference between then and now is just how quickly society has basically been able to create this new asset class virtually out of thin air. And that's probably got something to do with the internet, which makes it incredibly easy for ideas to spread if just enough people happen to believe in them. And then these ideas become basically reality. There are lots of other examples of this. For example, a couple of years ago, these meme stocks took off, driven by some posts on Reddit. Even the collapse of Silicon Valley Bank, which was driven mostly by a baseless rumor of an impending collapse, then actually resulted in its collapse because its depositors went to take their cash and their money out, right? Now, of course, if you have an alternative theory, a more informed theory about what's happening with Bitcoin, I'd love to hear from you in the comments, especially if you consider yourself a Bitcoin maximalist or a really early adopter of crypto. So leave a comment below.